not surprising the market really they ran into resistance. Once you start to see a wall of volatility, implied vol discounts. We lost a lot of that Vanna flow, the JP Morgan hedged equity trade. A lot of that charm flow is gone now. So markets are looking for a next catalyst. What's the next catalyst? Is it Q1 earnings season, as I discussed? Could be. But this we know, hedge funds have been squeezed to near death. And I'm make fun of that. Obviously, it's been tough. It's been really hard. It's been really difficult market to trade. I thought Raul Paul in the Real Vision Daily Briefing on Friday was very open and honest, and that's kind of open, honest, and humility you only get from someone who's actually done it and done it at a really high level and been really successful on the buy side trading global macro. And he's like, look, this is one of the hardest markets I've ever seen and tried to trade. It's a very difficult market, but certainly we're seeing a lot of this most shorted high debt, most shorted low beta. It's like indiscriminate. Obviously momentum was one of the things invariable was short. Same thing with airlines and materials, or maybe not materials to the same degree, but this, in our opinion, this continues to look like a bear market bounce. And you have defensive leadership and people getting squeezed. That's not a very healthy signal. More importantly, everyone's favorite long idea is least shorted low beta, least shorted value, financials, why yield curve, energy, including ours, least shorted ADRs, et cetera, least shorted growth. It's indiscriminate in terms of everyone's favorite long ideas underperforming in this squeeze relative to their a lot of their shorts, which obviously kicked off a few weeks ago, and then you're still seeing some of the residual on that as well. So, will in the context of this performance pain, are hedge funds going to take their ball and go home incrementally, or are they going to sort of try to flow assets and play a catch up game of chase? I don't think they have a choice if Q1 earnings season is really positive and guidance is along the lines of nominal GDP is extremely high and this is great versus, oh no, we have margin pressure as a function of this incremental push in inflation, the recovery in the labor force, and oh by the way, growth is starting to slow at the margins. If you look at some of the trucking rates and some of those things, will unpack again on next Tuesday in the macro scouting report.